Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your
Hello, hello. Hello, hello. Good morning. Can you guys hear me? Please confirm in the chat section. Can you hear me? Hello, hello. One second. All right. So, can you hear me? So, guys, can you please confirm whether you can hear me? Yes. Okay. Perfect. So you can hear me. So, hello traders. Good morning. Hope you had a great weekend and a great trading week. Although I thought it was a bit boring. As a swing trader, I didn't find any interesting opportunities last week. However, it must have been an interesting week for day traders, given the wide ranges we saw in some majors and metals. So welcome back to our live weekly market analysis, London session open. So heading into the trading week of August 18th to August 22nd, stock market is coming off a solid prior week where stock indices like the S&P 500 and the Nasdaq notched small gains amid cooling inflation signals and tariff extensions. So regarding the US-China trade deal I told you about last Monday. By the way, do we have anyone from last Monday? Guys, is there anyone from last Monday? Okay, great. So what I was saying is that regarding the US-China deal, the one I told you about last Monday, we don't have a full deal yet, but we have big news. Trump signed an order on Monday night, August 11th, so at the end of just before the deadline, extending the tariff pause another 90 days, pushing the deadline now to November 10th. This avoids a spike to 145% US tariffs on China. So if that didn't happen, if they didn't extend the deadline, the tariffs would have became 145% on Chinese goods and 125% the other way around. So China has 125% tariffs on USA, and the US has 145% tariffs on China. So at least for now, they're okay. They extended it till November 10th. But China is still pushing for looser US rules on AI chips, like the NVIDIA chips, for example. They're still having some discussions about that. So all in all, we can say the vibe is cautiously optimistic. The odds of a Fed rate cut in September is now at nearly 93%. So the markets are expecting a chance of 93% that the Fed or the Federal Reserve will cut interest rates in their September meeting, actually a month from now, on September 17th. Okay? Especially after the mixed data we saw, we saw CPI last week and we saw PPI. So we had softer consumer prices, which is the CPI, but hotter than expected wholesale costs, which is the PPI. Now, the hotter than expected PPI, that was largely because of the rise in services costs in July, with services costs increasing to 1.1% in July. So it might not sound a lot, but That is the largest monthly gain since March 2022. So that is the main reason, I believe, behind the spike we saw in PPI. Of course, crypto hit new all-time highs. Bitcoin reached a bit over 124K mid last week, but gold dipped as tariff fears eased. Now, remember what we talked about last Monday on gold, that Trump was planning to impose tariffs on gold bars coming from Switzerland. So that got settled quick. No tariffs on gold bars from Switzerland or anywhere. Trump clarified last Monday that the mix-up won't stick, which eased the fears of supply chaos. Shipments resumed, but some Swiss US flows are still paused for final rules. But this calmed the gold market after the previous week's spike. So, not this past week, the week before. That's why we saw gold dropping. Now we're talking fundamentally. After we finish the fundamental summary, we'll go to charts and we'll see what gold is going to do. Okay, so we also have some geopolitical stuff, like the recent Trump-Putin summit ending without a Ukraine deal, but with productive talks. So this adds more uncertainty because as Trump's urging Kiev to negotiate could ripple into energy and defense stocks. So the energy and defense stocks might get affected because of Trump's urging and bullying and nagging on Ukraine and Kiev to negotiate with Russia. So let's see how that turns out. This week, you need to watch for volatility around Fed events. We have several Fed events. A dovish tone could boost risk assets like stocks and crypto, while hawkish signals might pressure them. What they should announce it now. It's been 1 week. Okay. Where are you from? Where am I from? I am from Jordan. Okay, so back to what we were saying. What did I say? Yeah, I was saying that a dovish tone from the Fed would boost risk assets like stocks and crypto, and a hawkish tone would do the opposite. So, by the way, guys, does anyone know what dovish and hawkish means? Okay. Anyway, for those of you who don't know what dovish and hawkish mean, dovish means rate cut friendly, while hawkish means the opposite. Rate cut friendly meaning that the tone that the Fed uses is not restrictive in terms of monetary policy. So the tone they're using is more inclined towards being toward cutting rates, while a hawkish means that they have a more restrictive stance in the monetary policy. So they're more likely to keep interest rates high. That's what dovish and hawkish means. So you'll hear this a lot in news. So anyway, so please, guys, focus on key levels, use stops, and manage risk, and don't chase highs without a plan, because this week is going to be big, and I'm going to tell you why it's going to be big. This week's calendar is lighter on data, but heavy on Fed speak. So a lot of Fed officials are going to speak, especially Powell, which often moves the markets more than numbers. That's why I was telling you it's a heavy week. The Jackson Hole Symposium, which is a big annual gathering, Fed gathering, starts on Friday with Chair Powell's speech as the highlight on Friday. Okay, so that's the big event we're waiting for. That's the Jackson Hole Symposium. Okay, does anyone know what the Jackson Hole Symposium is? Let me drink some water. I'm gonna give you a minute. Okay. All right, so I'll explain what I'll give you a quick explainer on what Jackson Hole is. So the Jackson Hole Economic Symposium, my friends, is basically an annual gathering hosted by the Federal Reserve Bank of Kansas City. And it's held in Jackson Hole, Wyoming. It's like a high-level conference where top central bankers, economists, and policymakers from around the world meet to discuss big-picture economic issues, especially monetary policy issues, things like interest rates and inflation control. And it is important to us traders because the Fed chair, which is Jerome Powell, usually gives a key speech that can drop hints about future rate moves. So, as we said, dovish vibes often boost stocks and crypto, while hawkish ones might strengthen the dollar or pressure risk assets. So, markets hang on every word, so it can cause big swings. For 2025 this year, it will be on August 21st to August 23rd, with the theme, I believe, one second. Okay, the theme is, so the theme is going to be labor markets in transition. So the focus of this Jackson Hole Symposium will be on labor force or labor market, sorry, focusing on stuff like workforce changes, productivity, and their macro impacts. So long story short, Powell speaks on Friday, so watch out for volatility. And we have the London session just opened. All right, now let's take a look at the economic calendar and see how numbers this week might move the markets. We have the RBNZD, which is the interest rate decision of New Zealand Central Bank. It will be on Wednesday, 6 a.m. Dubai time. The previous reading was 3.25% interest. Now they're going to reduce it to 3%. So there will be a rate cut. The markets are expecting a 25 basis point rate cut for the NZD, which is the New Zealand dollar. Also on Wednesday, we have CPI for UK's CPI. It's expected to come in a bit higher than the previous one. The previous reading was 3.6. Now the forecast is 3.7. Also, we have Euros CPI, the Eurozone CPI, which is expected to stay unchanged at 2%. By the way, if you remember from last time, guys, if we have anyone from last time, we said that inflation sometimes is healthy. It's healthy to have 2% inflation because it shows you that the economy is growing and the companies are hiring and they're giving higher wages and so on. So 2% is actually every central bank's target. So the Central Bank of Switzerland and the European Central Bank were the first two banks to achieve their target, which is 2%, because of COVID pandemic, inflation rates were crazy high. We saw 9%, 9.1%, 8.5% in that period. So they did a really good job in bringing inflation down to 2%. So we have Euros CPI, which is the Consumer Price Index, which is an index used to gauge inflation, expected at 2%, and the previous was 2% as well. So what else do we have? We have the FOMC meeting minutes. The FOMC is basically the Fed committee. It stands for Federal Open Monetary Policy Committee. So that's what FOMC stands for. They had a meeting last week or last month, and now the meeting minutes will come out on Wednesday. At what time? At 10 p.m. Dubai time. Then we have Thursday, we have initial jobless claims from the US, expected a little higher, So people who don't have jobs go and claim that they don't have jobs. So that's how we get this number. Then we have the Fed manufacturing index. Expected to be lower than expected, which is bearish for the US dollar. Manufacturing PMI is expected to be higher, so that's bullish for the US dollar. Then we have S&P Services PMI, which is expected to be lower, which is bad for the US dollar. And then we have existing home sales expected to be slightly lower, which I don't think will move the markets much, but it's good to keep an eye on that. And then we have Friday. Friday is actually the highlight of the week. We have Chair Powell speech in Jackson Hole Symposium. All right. So let me see what else do we have here before moving to the charts. What do we have? What do we have? Okay. I think I covered everything in terms of fundamentals. Oh yeah. Now Zelensky-Trump meeting today. There is a meeting today. Their meeting today could stir geopolitics. Mainly, we're talking energy and defense plays. So keep an eye on oil if Ukraine talks progress. No major holidays this week, but thin summer volume. Please focus on this one. Thin summer volume might amplify moves. So be careful of that. Always remember, trade what you see, not what you hope. This period or this time of the year, most of European institutions or professionals are off because it's the summer break. So we have thin summer volumes. That makes it easier for other big players to move the markets as they wish and hunt your stop losses. So be careful trading this period of time, especially this week. Or no, actually, we started last week. Actually, yeah, we have only one more week to go, and then trading should be back to how it is, and liquidity should be back as it should be. And now, before we go to the charts, does anyone have any questions on the fundamentals we just discussed? Hello, guys. Hello. Does anyone have any questions before we move to the charts? Come on, feel alive. Thank you, Sunny Patel. Hi, Danush. Do you have any questions? Okay, so I'm gonna wait for one more minute, and if you don't have questions, I'm going to move to the charts. Okay. You can do these. Do what? All right. Okay, so let's move to the charts. Um, as always, we start with the DXY. 1 second. Where is it? Hello. Sorry. Okay, so can you guys see my chart? Yeah. So let me move back here. All right. So as always, we start analyzing the weekly chart to see how the big picture is looking like. And now we have pretty much the same, nothing changed. But last week closed bearish, which is a sign that we might be seeing bullish setups on other instruments priced against the US dollar. So it tried to go higher, but it got rejected and closed below the previous week's low. So that's bearish for the US dollar. Let's go for the daily. I was waiting for three higher highs, three higher lows, so that we have a trend. But I think it's not going to give me that. So I have my alerts here and here. If it breaks below, I go heavier on buying other stuff priced against the US dollar. If it breaks here and closes above here, I'll be looking into shorting other stuff priced against the US dollar. But that's too early to decide. By the way, I keep saying three lower lows and three higher highs, three higher lows, because in order to have a valid trend line, you need to have at least 3 points. Otherwise, like if you join between point A and point B, that's actually not a trend line. That would be a straight line mathematically. So that's why I keep saying I need three higher lows and three higher highs. So far, we have three higher lows, which is not confirmed yet. This could just break here and continue pushing lower. So that's for the dollar index. Okay. Then we have the 8 hours. 8 hours still looks bearish to me, especially after last week's attempt to go higher, but it got rejected. So yeah, we're still bearish. Okay, let's move now to the euro, which is, as I told you the previous time, we call it an inverted dollar index chart because it looks exactly the opposite. Take a look at the euro here and look at the dollar index. It's exactly the opposite. Yeah? Up, down, up. Then here we have down, up, down. So that's mainly because, as I told you last week, euro is the highest, has the highest weight in the dollar index weighted average calculation. So that's why we always say euro should be or has to be the opposite or an inverted chart of the DXY. So it closed bullish last week. Euro closed bullish. Then we have the daily. The daily is also still bullish. We have the price still above all moving averages. That's still healthy and going upwards. I'd be targeting on euro. I'd be targeting the 1.1960 level. That would be a level for take profit. Let's see, 4 hours. We might have some pressure here from this zone, but we're still above all moving averages. So the momentum we're getting from downwards is stronger than the momentum we're getting from the top. So yeah, we have a stronger floor than we have a ceiling. So I think it'll keep pushing higher as long as it stays above this floor. Okay. Now let's see the GBP, the pound. Yeah. Remember last week we said we saw the engulfing candle closing here. I said I'd love it if it comes to 133.60. I'd buy, and then my stops would be here and my target would be here. Unfortunately, it did not fill my position, or it did not fill my order to buy, but it did pretty much what we said, is that it will retrace a little bit lower, then keep pushing higher, and that's what we're seeing now, and we're targeting 1.37 on GBP USD. Let me check if anyone has questions. Oh, okay. Guys, do you have any questions, or should I keep going? Okay, I'll keep going. All right, so also still positive, still bullish. We're expecting GBP to continue going higher. How was the weekly looking like? Very bullish. The daily is also very bullish. Let's see the 8 hours. We're still in an uptrend, very steep uptrend. We're talking short-term trend, of course. I believe it will keep going higher, and dollar will keep going lower, euro will keep going higher, and GBP will keep going higher as well. What else do we have? Let me check AUD. I remember last week. One second. Yeah, we took this trade as well. I told you we have the engulfing candle at a very important structure point, which is the trend line, the long-term trend line that has been intact for, I don't know, 17 years now, or even more. So we caught this last Monday together, if you remember. I told you that we have this engulfing candle. I'd be happy to sell here, 0.6530, with stops at 0.6645, or let's say 50, and targeting the lows. So hopefully this one moves in our favor, because that would be a big one. It filled our order and closed bearish, so let's keep watching that. The daily, what do we have here? The daily is also bearish. The 4 hours is also bearish. As you can see, guys, it's facing difficulties in breaking highs, although it is breaking higher highs, but I don't like the momentum of it. It's weak. Like, usually when something is trending, it should be trending this way. Okay, the angle of the trend should be around 45 degrees, if that makes sense. It should be not too steep, not too flat, but it should be around 45 degrees. So what we have here is, I don't know, that looks like a dinosaur. That does not look like a trend line. Anyway, so what else do we have? Let's talk about gold. Let's talk about gold. Last but not least, let's go to weekly. Okay, so the weekly candle actually closed bearish, but in my opinion, I think that's it for gold. I think we'll start seeing higher prices for gold now. It will start climbing because in the past, let's say 2-3 months, it's been how do we call it, accumulating liquidity in the form of a triangle, which I showed you last week. And last week, someone asked me if they should buy gold. I told them no, I wouldn't buy here because it was around 3,370. I told them no, I wouldn't buy because it could just retest its trend line, and it actually did. It did today on the Asian session. So that's what happened. It retested the trend line and got rejected strongly from the trend line. We have a $30 rejection, which is like I would consider it impulsive, not corrective. So I think let's see how this candle closes, which is the daily candle, and we can decide uh, according to how it closes. Now, looking at 4 hours, yeah, I think it's done. I think it's done dropping now. So now let's try to connect the fundamentals with the technicals. Technically speaking, gold is showing us that it's going up. Yeah. So what fundamentally could be happening that would make the gold go up? Like there was the U.S. Switzerland tariff drama, but that, as we said, that got settled. So that's gone. But what do we have now? We have discussions and negotiations between Ukraine and Russia, Ukraine and the US, and the US being an intermediary between the both countries to solve the issues. So anything could go wrong between the three counterparts, which would make people feel more uncertain about the future of the strongest economy, which is the US, or even the geopolitical situation in the world around them. So this uncertainty would add more momentum to gold prices, and we would see gold going up. Now, technically speaking, last week I explained to you what I see on gold. I see a symmetrical triangle, or as Elliott wave technicians call it, the Elliott triangle, which is an A, B, C, D, E, and then we have the climb above. That's a continuation pattern, of course, and then we target the $3,600 per ounce level. Okay, so that's what we have now. So technically, gold should be going up if it doesn't break below this level, which is E, and it does not break below this point, which is C. The confirmation, we'll get the confirmation once we break above 3,450 or 40, the last high it made. I think once we break that level, we'll see the 3,600 in no time. So that's technically. Fundamentally, I just told you that we have some negotiations going between Ukraine, Russia, the US. So that might fuel the rally or the short-term rally in gold prices. All right. So I think that's it for today. But I'd love to hear if you have any questions. I'd love to answer your questions. شو شباب, any questions? Who's trading gold this week? You know what? I'll check the okay. How to identify after ABCD structure and how to confirm trend shift after correction. Derwin, I couldn't understand your question, but I think you're going somewhere with the question. So can you please rephrase it? Just let me make sure that I understand you. We have someone saying, no questions, well understood. Thank you. How to identify after... Darren, please try to rephrase your question, because I think you have a good question, but I really can't understand it. You dropped a question. 1 second, please. What moving averages am I using? Okay, that's a good question. I have several moving averages, which are all simple moving averages. I have the 10 moving average, 10-day moving average, 20-day moving average, 50, 126-day moving average. This one I invented, or I came up with. I didn't invent anything, but I came up with this one. I thought that prices reject nicely from the 126-day moving average, which is half of the trading days we have in a year. And then we have the biggest one, which is the 200-day moving average. And guns previous, so it seems like gold will be bearish in this week technically. What's your suggestion? Yeah, we have a good question. Walid is saying gold last week candle closed bearish and it engulfed the previous candle. So it seems like gold will be bearish this week technically. What's your suggestion on this? Now, I'd agree with you if we were not in a range. It's gold has been ranging for the past 3-4 months now. So engulfing candles do not count as much as they do in trending markets because engulfing candles are reversal patterns. All right. So if you're not in a trend, what are you reversing? You get my point? Okay, in which method you can identify trend change? Okay, how to find the end of a correction. Now, listen, Derwin, as we always say, we technicians, I mean, like technical analysts, we don't look to eat the head and tail of the fish. We eat the nicer part. Let me draw it for you 1 second. Okay, so imagine we have this. Okay, so imagine this is a fish. Okay, we do not eat heads and we do not eat tails. So I don't care where the correction ends or starts. I want to be entering a confirmed move, which would give me this nice piece of meat. Okay, so I don't care how to find the correction, but I look out for signals from different tools. Like, for example, I look at reversal patterns, like, for example, head and shoulders, candle patterns like the engulfing. And I also use some indicators. I use the, what's it called, the RSI, which is the Relative Strength Index. I use this to spot possible reversals and end of corrections or end of impulsive moves. Now, most of people you see on YouTube would be telling you use the RSI to see when price is overbought or oversold. I'm sorry, excuse my language, but this is bullshit. There's no such thing as overbought or oversold. If it's breaking highs, it could still and keep breaking highs forever. And if it's breaking forever, I mean until it liquidates your account. And if it's dropping, it could keep going down until it liquidates your positions and account. So that's bullshit. How I use the RSI to spot possible reversals. Let me show you how. 1 second. Do I have it here? Yes. No. Okay. Indicators. We go here. 1 second, guys, please. Okay, we have RSI. So if anyone tells you otherwise, that RSI has been is used, RSI is used to see the oversold and overbought areas, don't let them, because simply I read the book of the guy who invented the RSI, which is, I believe his name was Wallace Wilder. He invented that back in 1970s. So he made it to spot divergences. What do I mean by divergences? Let me show you. So let me close this one. What's that? Okay. 1 second. So that's the RSI, okay? Here. So we go to 1 hour. That's to answer Darwin's question. So Darwin, my friend, we have been trending down. We have lower highs and lower lows, right? Then this happened. We have the price is making lower lows, but the RSI is making higher lows. So that's a positive divergence. It means that the price is telling you that it's still weak, while in reality it's not. So it's reversing from here. It might reverse from here. That, of course, that's not the RSI is not a tool that you can use on its own to trade, but it's good to have as a filter, a negative filter, meaning that if it doesn't look good, I don't enter the trade, or I cut my risk in half, for example. You got me? Let me see any other question. Is there any trade on London session for gold now? There might be, but actually, let me see if we have any trade setups. Although this is not a live trading session. 15 minutes looks good. 5 minutes looks good. By the way, guys, I'm a swing trader. I don't do day trading, but I'm just like just taking a look. You know what? I think I'd go long here. It stops here and TP here. And if it keeps going down, I re-enter here, it stops here, and say take profit. So yeah, this could be a setup, but not an A+ setup, of course. I wouldn't enter that. But just to answer your question, so yeah, you can get gold setups on in London session. We answered that. We answered that. Someone is saying they see a buying opportunity in EURUSD in 15 minutes. Would you confirm it, please? I cannot do that. I'm sorry. Gold fundamentals is bullish. Gold fundamental actually is not bullish nor bearish. It's still like it's still hanging in the middle, you know. Please recommend us fundamental book for learning. Okay. Fundamental, I say go with macroeconomics. I'll drop you a link here. Which day is right for you trading? Like I want to say, which days are you trading? Yeah. So I trade almost every week, every day of the week, but I try to avoid trading on the edges of the sessions, meaning like I avoid trading around the session close or the session open. Okay, that's what I basically do. But if I get a setup and my alerts start ringing, I'm going in. It doesn't matter, even if it's Saturday. I don't care. What about volatility in summer season? It's not volatility, my friend. It's more of thin volume. We don't have enough liquidity because most of institutional professionals are off. They're going on summer vacations with their families, so they're not working. So this leaves the battlefield, if that works. That leaves the markets in the hands of a few big players. So it gives them the ability to move around with the market and manipulate the market as they wish, or not as they wish, but they can do it better when there's thin volume. So you'll see a lot of stop loss hunting and so on. Okay. I think I answered all of those. What a beautiful fish. Thank you. Hello, everyone. All right. I think that's it for today. Thank you, guys. I was really happy to host the London session open again, and hope to see you on the next one. I think we'll see each other a bit more going forward. I think I'll be hosting more segments on Tradin TV, but I'll keep this to the team of funding pips to decide. Anyway, so have a good one and have a good week of trading. Trade responsibly and make sure to manage risk. And good luck. See you.